If you own a home and you are retired, or you are staring down the barrel of retirement, there is a financial storm happening right now that nobody is talking about. It is not happening next year. It is not a proposal for the distant future. It is happening right now. In the last 12 months, the landscape of property taxation in America has fundamentally shifted. And if you are not paying attention, you are funding local government surpluses with your retirement savings. Welcome to Tax Hack Pro. Today, we are going to expose the massive changes reshaping property taxes for retirees across the United States. Most homeowners have absolutely no idea this is happening. We are seeing the largest homestead exemptions in the history of the country taking effect. We are seeing states that are now refunding 100% of property taxes to seniors, provided they file a single piece of paper. We are seeing new freeze programs that lock in your assessed value forever, protecting you from gentrification and inflation. We are seeing assessment caps being implemented for the first time in decades. And we have one state that is actively working to eliminate property taxes on primary residences entirely. These are not maybes. These are not campaign promises. These are laws that have passed and are in effect today. Some of these updates could put thousands of dollars back into your pocket this year. Others have strict deadlines approaching in weeks, not months. And a few of these changes are significant enough to completely alter your retirement financial plan. This is your comprehensive property tax update. We are going to cover the developments that matter, the deadlines that are coming for you, and exactly what you need to do to stop overpaying. Let's start with the heavy hitters. These are the changes that made history and are changing the math of retirement. Headline number 1, Texas. Everything is bigger in Texas, including the tax cuts. In November 2023, Texas voters overwhelmingly approved Proposition 4. This legislation raised the standard homestead exemption from $40,000 to $100,000. Let that sink in. That is the largest homestead exemption in American history. No other state comes close to knocking that much value off your tax bill instantly. Now, 2024 and 2025 are the first full years where we are seeing the true impact of this change. The savings are tangible. But for seniors aged 65 and older, the news gets even better. You get an additional $10,000 exemption on top of the $100,000. That means the first $110,000 of your home's value is completely invisible to the school district tax collector. But Texas didn't stop there. They also implemented a compression of tax rates, forcing school districts to lower their rates. And perhaps most importantly for retirees, your school taxes freeze permanently at age 65. The dollar amount you pay to the school district the year you turn 65 is the maximum you will ever pay for the rest of your life, provided you don't add significant new square footage to your home. Here is the critical update that you need to hear. Despite this massive relief being available, data suggests that a significant percentage of eligible Texas seniors still have not enrolled. They are paying hundreds, sometimes thousands more than they have to because they have not filed the specific paperwork for the over 65 exemption. If you are in Texas and you are over 65 and you have not checked your status with the Central Appraisal District, you are literally burning money. Headline number 2, Nebraska. While Texas focused on exemptions, Nebraska took a completely different tactical approach, direct refunds. Through LB 243, which was expanded significantly in 2024, Nebraska has created a system to refund up to 100% of the property taxes paid to schools and community colleges. Here is how it works. You pay your property taxes like normal throughout the year. Then you file Form PTR, the Property Tax Relief Form, with the state. The state then calculates your credit and sends you a check or a direct deposit. In 2024, income limits for this program were raised, meaning more middle-class retirees now qualify. Refund amounts were increased, meaning the checks landing in mailboxes are bigger. This is effectively a state-subsidized rebate for owning a home, but here is the update for right now. The 2025 filing window is approaching fast. This is not automatic. The state does not just send you the money because they like you. You have to ask for it. If you live in Nebraska and you are not filing Form PTR or the related Form PTC for the community college credit, you are missing out on thousands of dollars that the legislature set aside specifically for you. Property tax updates like these do not make the evening news because they are complicated. But here at Tax Hack Pro, we do the digging so you don't have to. If you want to keep your money, make sure you subscribe to the channel right now so you never miss a deadline. Texas raised exemptions. Nebraska is refunding taxes. But the third headline is the most radical experiment in the country. One state isn't reducing property taxes or refunding them. They are working to delete them. Headline number 3. North Dakota. North Dakota is attempting something that no other state in the modern era has tried. Through House Bill 1158 and a series of related legislative moves, North Dakota is working toward the elimination of property tax on primary residences entirely. Not a reduction, not a deferral, elimination. The plan is to use the state's massive oil and gas revenue surplus to replace the funding that local schools and counties would typically get from homeowners. This isn't just a proposal floating around the State House. Legislation has passed, and implementation is underway. The phase-in process is continuing through 2025 and 2026. If fully successful, North Dakota homeowners would eventually pay zero property tax on their primary residence. Imagine what that does for retirement security. You own your home free and clear, and you have no annual tax bill. It changes the entire equation of fixed-income living. Other states with resource wealth are watching North Dakota very closely. If this works there, we could see a domino effect in other energy-rich states. 3 headlines. 3 different philosophies. Texas with record-breaking exemptions, Nebraska with direct cash refunds, North Dakota with total elimination. The pattern is clear. States are competing for retirees. They know that property taxes are the #1 killer of retirement budgets, and they are getting aggressive to keep you in their state. But while those 3 states are making the big noise, there is a quieter, perhaps more important trend spreading through dozens of other states. It is called the freeze. Headline number 4, the freeze expansion. Freeze programs are the sleeping giant of property tax relief. These are programs that lock your assessed value in place the moment you turn 65. Your home's market value can double, it can triple, it can go to the moon. Your tax bill stays exactly the same as it was on your 65th birthday. These programs are spreading fast. States that never had them are creating them. States that had limited programs are expanding them. This trend could affect you even if you are not in a headline state like Texas. Let's look at Georgia. Georgia has 159 counties, and in Georgia, property tax relief is often a local decision. What we are seeing right now is a county-by-county race to add senior freeze programs. Some counties are freezing the entire assessment when you turn 65. Others are freezing just the school tax portion. New counties are adding programs that didn't exist 12 months ago. The rules vary dramatically. Fulton County rules are different from Cobb County rules, which are different from Gwinnett County rules. If you live in Georgia, you cannot rely on state-level advice. You need to check your specific county tax assessor. Call them and ask 2 questions. Do you have a senior freeze program? And what are the income requirements? This is changing so fast that websites often aren't even updated. Let's look at South Carolina. At age 65, South Carolina offers a powerful double protection. First, the first $50,000 of your home's fair market value is exempt from all property taxes. Second, you can apply to freeze your property tax assessment value. This means if you have lived in your home for 20 years and values have skyrocketed, you are not punished for your neighbors selling their homes for high prices. Let's look at Illinois. Illinois has the Senior Citizens Assessment Freeze Homestead Exemption. It is a mouthful, but it is valuable. It freezes the equalized assessed value of your property. It is income limited, currently hovering around $65,000 in household income, but for those who qualify, it is a lifeline. But here is the critical detail about Illinois that trips people up. You must reapply every single year. It is not one and done. If you miss the renewal window, you lose the freeze, your assessment jumps to current market value, and you get hit with a massive bill. Many eligible seniors do not even know this program exists, and others lose it because they forgot to file the renewal paperwork. Now, we have to talk about a timing issue that could cost you thousands of dollars. When you freeze matters enormously. This is the concept of the freeze trap. Freeze programs protect you by locking your assessed value, but they lock it at whatever value exists the year you apply. If you froze your assessed value before the post-pandemic spike, say in 2019 or 2020, you are a genius. You are protected at that lower, pre-inflation level. Your neighbor's values went up 40%, but yours stayed flat. You are paying taxes on 2019 dollars. But if you are just now applying for a freeze after your area has reassessed using 2023 or 2024 market values, you might be locking in at the peak. You are still protected from future increases, which is good, but you have effectively frozen your taxes at the highest they have ever been. Understanding this timing is critical because major reassessment cycles are hitting right now. Post-pandemic values are finally showing up on tax bills. The assessment lag is over. Here is what is happening in homes across America right now. Retirees are opening their property tax bills and seeing numbers they never expected. Shock bills, bills that are 20, 30, sometimes 40% higher than last year. and they don't understand why, because the news says the housing market is cooling. Here is the explanation. Assessments lag behind reality. It takes 1 to 3 years for market data to be processed and applied to your tax bill. In 2021, your home value jumped 20%. In 2022, another 15%. But your assessment office was using old data. They hadn't caught up yet. You thought you dodged the bullet. Then comes the 2024-2025 reassessment cycle. Suddenly, the assessor catches up. They apply all those years of growth at once. Your assessment reflects the 2021 jump, the 2022 jump, and the 2023 stability all in one massive correction. Your bill explodes. Where is this hitting hardest? New Jersey, already the highest property taxes in America. Residents are seeing reassessments pile even more cost on top of an already heavy burden. Illinois, particularly Cook County. They use a triennial system, meaning values are reassessed every 3 years. That cycle is hitting now, and people are seeing 3 years of appreciation land on a single tax bill. Connecticut, they do revaluation every 5 years. Imagine 5 years of housing inflation hitting your tax bill in a single morning. That is what is happening in multiple Connecticut towns right now. The assessment crisis is real. Post-pandemic values are finally hitting tax bills, and retirees on fixed incomes are the casualties. But here is the secret. You are not helpless. You can fight back. If your assessment is wrong, and statistically, many are, you can appeal. If you are missing exemptions, you can apply. The options exist, but every option has a deadline. Let's break down your arsenal of defense. Option 1, the audit. Check your assessment for factual errors. You would be shocked at how often the government gets this wrong. Check the square footage. Is it accurate? Check the lot size. Did they list a finished basement when yours is just concrete and spiders? Did they list a fireplace you don't have? Did they count a shed as a habitable structure? Every error inflates your value. Every error means you are overpaying. Pull out your assessment notice, get a tape measure, and check their work. Option 2, the appeal. Every state has an appeal process, but the window is tiny. It usually opens the day you receive your assessment notice and closes 30 to 90 days later. Do not wait. You need to gather evidence. You need comparable sales in your area of homes that are similar to yours, but sold for less than your assessed value. You need photos of damage or deferred maintenance that lowers your home's value. A crack in the foundation is bad for resale, but it is gold for a tax appeal. Option 3, the exemption hunt. Apply for every single exemption you qualify for. If your assessed value just jumped, exemptions become mathematically more powerful. They reduce the base your bill is calculated on. Standard homestead, senior homestead, disability, veteran status, surviving spouse of a first responder. There are dozens of niche exemptions that go unclaimed, but here is the catch. The gotcha that ruins everything. Every single one of these actions has a deadline. Miss the appeal window by 24 hours, and you are stuck with that high assessment for another year, maybe 3. Miss the exemption deadline, and you pay full price while you wait for the calendar to turn. Here is the reality about property tax deadlines. They do not wait, they do not flex. And the clerk at the county office does not care about your excuse. Most property tax deadlines, exemption applications, appeal windows, refund filings, fall in the first quarter of the year, between January and April. Let me give you the key deadline categories you need to know, because your financial health depends on it. Category 1, exemption applications. In Florida, the Homestead Exemption deadline is a hard stop on March 1st. In Texas, most exemptions are due by April 30th. In Georgia, it varies by county, but many fall in March or April. These are hard deadlines. If you moved into a new house last year, or if you turned 65 last year, you must apply now. It does not happen automatically. Category 2, assessment appeals. The window opens when you receive your assessment notice. Do not throw that envelope in the deal with it later pile. That window usually closes in 30 to 45 days. Some states have specific calendar cutoffs. If you miss this, you have legally agreed that their number is correct. Start gathering your evidence the day the letter arrives. Category 3, refund and credit programs. Nebraska's Form PTR has a deadline later in the year, usually in the summer, but you should be gathering your documents now so you don't forget. Circuit breaker programs in states like Missouri, Oklahoma, and Pennsylvania have their own filing windows. Many of these require annual filing. Category 4, the renewal trap. This is the one that catches people off guard. Some exemptions are one-time, apply once and you are set for life. Others require annual renewal. We mentioned the Illinois senior freeze. If you assume you are still enrolled and you throw the renewal letter away thinking it's junk mail, you lose the benefit. You won't realize it until the higher tax bill arrives, and by then, it is too late to fix it for the current year. Verify with your county that you are still active in every program you think you are. So, what is your action plan? What do you need to do to become a Tax Hack Pro? Here is your action bulletin for this week. Step 1. Find your specific deadlines. Go to your county assessor's website, or if you prefer, pick up the phone and call them directly. Ask specifically, what is the deadline for the senior homestead exemption? What is the deadline to appeal my assessment? Are there any new freeze programs available? Get the dates. Step 2. Mark your calendar. Put every single date on your calendar. Set a digital reminder on your phone for 2 weeks before the deadline. Write it on the paper calendar in your kitchen. Do whatever works for you, but do not rely on your memory. Step 3. Apply or renew early. Submit your paperwork at least 2 weeks before the deadline. Do not trust the mail to be on time. Do not trust the online portal to not crash on the final day. Give yourself a cushion. Step 4. Conduct a mini audit. Look at your property record card online. Verify the details. If you find a mistake, you have the ammo for a successful appeal. I have seen retirees lose thousands of dollars simply because they were 3 days late on a form, or because they assumed they were enrolled in a freeze program when they actually needed to renew. The system relies on your apathy. It relies on you being too busy or too confused to fight back. Do not let them win. These programs, the exemptions, the freezes, the refunds, were created for you. The money is there. The laws have been passed. But you have to take the final step to claim it. Property taxes are rising, but your bill doesn't have to ruin your retirement. Stay vigilant, know your deadlines, and take action. If you found this breakdown helpful, if you want to keep your hard-earned money out of the government's hands and in your own pocket, make sure you hit that like button. It helps the channel grow and reach more people who need this information. And most importantly, subscribe to Tax Hack Pro. We are tracking these changes state by state, county by county, so you don't have to. We will see you in the next video with more strategies to hack the tax code and secure your financial future.